Vaccine or not, our next guest sees the market flirting with fresh highs. Market researcher Jim Bianco is president of Bianco Research. I thought the vaccine was the holy grail to all of this, Jim.
I think the holy grail is stimulus, either government stimulus or Federal Reserve stimulus. That is what's been pushing this market higher. As far as the vaccine goes, yeah, make no mistake that would be great if we get a vaccine, but I don't think that's what's been driving this market the last few months, especially since the early June highs.
You know, when you say the holy grail is stimulus, stimulus is not just, $3.5 trillion versus $1 trillion, which is the divide between Republicans and Democrats right now, is a huge divide. So when you say the holy grail is stimulus, how much stimulus do we need?
Well, let's keep in mind how stimulus is going to work. We've seen this with the government shutdowns, and we've seen this with the debt ceiling fights. If the $600 a week federal unemployment insurance ends July 31st, somewhere around August 1st at 1 a.m., the conversation begins, and somewhere around 4 or 5 a.m., we're going to have a deal. That's at least the way it's gone in the past. So those gaps will be bridged probably not until past the 12th hour, as we've seen you run into the first or something like that. And that's why I think the market is going to stay very calm about all of this discussion. $2 trillion would be the ideal number. I believe, anything more than that would be better, and we'll have to see how it works out. What would be bad, which I don't expect, is if we walked away with nothing. But I would really be surprised, and I think a lot of market participants would be surprised by that.
Hey, Jim, it's Tim Seymour. The other side of your story, and I'm agreeing with you that you don't fight the Fed, you don't fight the liquidity, and sounds like you threw in the towel at some point. What's the Fed doing, though? It does appear that they're using less balance sheet over the last few weeks. Do you think this is just a very mild tapering of nothing? But to be clear, the correlations we had for stocks were absolutely 1-to-1 or some multiple of that to the Fed balance sheet growing. The Fed balance sheet is shrunk small. Are they changing tact at all?
No, the simple answer with the balance sheet is a lot of the dollar swaps and a lot of the non-securities purchases are what's rolling off. If you were to break down the balance sheet and look at how many corporate bonds they're buying, how many ETFs they're buying, how many treasuries and mortgages they're buying, they're still plowing ahead with all of that. It's been some of that other non-security purchase stuff that has been coming down. And as far as it goes with, don't fight the Fed, in the second quarter, about 70 or 80%, depending on how you measure it, of all the ETF flows went into stuff that the Fed is buying. Corporate bond ETFs, high yield ETFs, aggregate bond ETFs, not equities. That's one of the rare times that you've seen with ETF flows that the vast amount of money has been flowing into a fixed income asset. And not only that, the fixed income asset that the Federal Reserve is buying. So this whole idea of co-investing with the Fed has been huge, and I don't think it's stopped just because the balance sheet has peaked off of some non-securities swaps that have been rolling off the last couple of weeks.